The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, we're just about ready to start. I thought I would just do a quick check and make sure the sound is coming through okay and you can see my screen okay. Reg, thank you so much for your comment. I love your NPI. A few people have chatted in and very much appreciated. Thank you for that. Obviously, it's Dr. Toledo's brilliant indicators that make it all possible. So I'm just fortunate to have put it together. Good morning, Con. Thank you so much and welcome everybody. Looks like the sound is coming through okay. Sandy, Joey, Jimmer, thank you. Ian, thank you. Tom, great to have you from Burlington. Tom says NPI rocks. Well, that's great. Yeah, if you've been using the NPI and like it a little bit today, and then we've got a terrific presentation coming up for you about Elliott waves from one of our subscribers who I don't like to use the word expert, but he's used it successfully for many years. So it'll be pretty fantastic. Oh, and Sue, great to have you from Wales. That's great. I always love the international flavor of these international online forums, so many different perspectives, and look forward to your participation and love the fact you can chat amongst yourselves and share comments and strategies and ideas amongst yourselves while we're going. I mean, I do hope you pay attention to the presentation, but but it's nice to take some time and make sure you chat with everyone and share your ideas. Dorn is asking if the NPI search can include top VST stocks. Yeah, Dorn, you would just, or Dom, I should say, you would just simply add another search criteria that sort stocks by top VST. Maybe 10 top VST. Very similar setup to the Chappell's Champs setup. Okay, well, listen, it's great to hear that everybody can hear me okay, and we're ready to roll. So I'll take this opportunity to officially welcome everyone to the VectorVest International Online Forum. Hard to believe it's August already, but it's everybody seems to be enjoying good weather for now, and we feel certainly bad for places here in Alberta. We've had a couple of areas hit by hail, and I know there's been lots of drought in the U.S. and UK and elsewhere, and so certainly our thoughts with everyone when that happens. But it is great to have you with us, and look forward to the day. All right, well, let's just see if my slides are moving forward here as well. And did move forward. There they go. So a quick risk disclaimer. Everything we will show you today is provided for educational purposes only. Our goal is to teach you more about the VectorVest system and how we analyze the markets and stocks, and then how you use that information is for you to make your investment decisions. But it's great to have you with us. So welcome again, everybody. Lots more folks coming into the room, and that's always appreciated. Love to have you here. So we'll do our global market forecast, and we'll just talk about the new NPI features that I presented in the strategy of the week. I was quite pleased or thrilled, or whatever you wanted to describe it, when VectorVest asked me if I would do the special presentation this week. I think it's only the second one that I've done for them over the years, but it was certainly my pleasure. And then after my part on the market updates and the new NPI features, we'll have an introduction to Elliott waves, swing trading from daily charts, looking at pattern recognition, putting probability on your side, presented by Phil Logan, a subscriber from Ottawa, Canada. So very much looking forward to that. And just a reminder, the replay, the recording will be available on YouTube. That's where we archive the webinars, so you can go back several months now, but this one will be available for viewing almost as soon as we finish, I think about 15 minutes after we finish. And then VectorVest will send you an email Monday afternoon that will have a link to today's slides. And so please do check all your email folders if you don't see it by sort of mid-afternoon on Monday. And if you're new to VectorVest, you're not currently a subscriber, you will need to email me with a request for slides. And you can do that. I've got my email identified at the end of the presentation, but I'll give it to you now. It's Stan, S-T-A-N, .heller@vectorvest.ca. Thank you, Michael V. I appreciate the kind comments. And Sue. Oh, Sue says the NPI folder is there in the UK, but the parameters have not been populated yet. So, we'll have to call support on that, Sue. I thought they were there, but we'll double check for sure. So thank you for letting me know. Yeah, Paul says the NPI chart setup keeps evolving. Why did you remove all the moving averages? We wanted to start with a basic layout, and moving averages are terrific, and certainly we have the stop and the RT moving averages on there. And we will have moving averages in the next sort of technical setups that we're going to be adding. But for now, we thought the basic layout with price action, front and center, is going to be important for a lot of investors. So that's the reason for it. Okay, so I'm going to go ahead. Can we automate the NPI? You can, but remember the exit criteria relies on those moving averages and other methods of exiting a trade, Dr. Toledo's 50% rule. I've kind of identified that, and I'm going to show you that as well. So Don, I will show you the backtesting that I've done. It's a manual backtest, and anytime you're doing a manual backtest, I'll give you the caveat that you try not to be biased by the right edge. You try to be as conservative as possible, thinking about when you would pull the trigger to exit, and I'll show you my results. All right, so really nice article in the essay in the Views by Angie Akers. Just a terrific review of the NPI, and just identifying again that it's become very popular with employees and subscribers alike. And certainly my email box tells me that as well. But she just talks about they've added the NPI layout in the graph layouts menu. Just a reminder that the safest searches are that 5-day moving average of RT recently crossing above the 40-day moving average of RT. We love it when the 40 is has come down and is in a trough or a valley and starts to move up. From there, that's a terrific entry, and we'll look at some of the charts today and see if we can identify the very best entries. And then the second item we've added is the 5-day moving average of the stop and the 40-day moving average of the stop in the upper portion of the graph. And for the long-term investor wanting to hold into those stocks a little bit longer, that works extremely well. So there'll be more on that in upcoming. So we certainly, we're just kind of getting started with the NPI. I think there's so much potential with it in terms of entries and exits and all that. So we'll be doing that. But I'm glad Angie took the time to show these 3 stocks that had the 5 and 40 crossover on the RT, and the results are pretty spectacular. And then just going from the the recent primary wave and DEW up signal on the US market, quick testing the top 10, 8% gain, and with the one search, the immediate 1 day crossover, and then the 3 day crossover, 5%. So pretty cool. And if you haven't watched the strategy of the week or special presentation video, there is a link here in the views under under the strategy section, and there's a link there. And we do hold sort of Q and A's on this. The Q and A for Canada is 12:30 Eastern time, and you just go to the Canadian software. Everybody has access to it, and if you're not registered already, receiving an email, you can register and join us at the presentation. Thank you so much. And there's David Paul. So great to see you in the chat, David. And feel free to chat in whenever you have some comments. Look forward to it, and hope you're doing well. I think that's a sentiment shared by many. All right. So let's move forward. Again, 2 new features for the NPI, and they should be in every country. I thought they were in the UK, and I believe I've got the UK open. I'm just going to do a real quick check here. So this is the UK software, so everybody can log in. I'm logged in currently to all 5 countries. Very, very kind greetings for David. So welcome. You're missed. I know you're back doing some, but we look forward to having you full steam ahead. So let's have a look at the unit search, and where you'll go is to the near perfect indicator folder. So there it is right there, and there's the NPI. See, I'm puzzled. You do need the Pro Trader, but I don't think you would even see the folder if you don't have the Pro Trader add-in module, and that's because these are technical searches with moving average crossovers, but we do have it here in the UK. And the 1 day crossover gets you in immediately if you want that to be your approach, and then the 3 day will give you some stocks. It returns more stocks than the 1 day crossover. There might be, who knows, there might be 50 stocks that met the criteria within the last 3 days, and just put in a moving average of 50,000 shares and a price of $1. I think the US is 100,000 average volume, but that's how it works. And then when you do the graphs, you can graph all. So we're kind of getting into it here, I guess. But for example, if you're in the VectorVest layout, and I'm in the UK, but if you're in the VectorVest layout, you'll just come in and left click on the graph layouts tab right here, and then come down, and here is the NPI near perfect indicator. So VectorVest has added the basic layout for us, and price action is always going to be king, right? So here we have a bit of a channel, a flat line. This is one of Dr. Toledo's favorite patterns, and then we have the breakout. Where does the breakout occur? Right in a valley or trough of the 40 moving average of the NPI, and there's the 5 moving average, which is really a very powerful momentum indicator. It's the 5 day moving average right on the RT, so it does smooth things out because the RT is a very fast indicator. This smooths it out, but what a beautiful crossover. You're into that, whoops, if I don't do that, you're into that trade at about 135, and now you're at 169. And there's the 5 moving average in blue on the stop price, the STOP. And the slope is what I look for there. And the sort of the distance between the 5 and the 40, very strong. So with the 40 moving average and the 5 moving average of RT, you might get a crossover here as we're moving up, and so you might take some profit early, and you get another opportunity to enter right back in, and again you get a chance to take profit early, but the 5 and 40 moving average on stop might keep you in for the entire ride, along with the price action. Does everybody kind of maybe just chat in a 2 if you're if you're getting this? Just give me a 2 if you're getting it, and maybe type in a 3 if it's still a little muddled for you. I see some 2s coming in that it's clear to many people. It looks like, yep. And I don't see any 3s so far. So I think that's one of the things I love about it, is how visual and simple it is. Betsy, so we'll keep working with you. Come to our Q&As, and we'll be showing you this over time. You're sure welcome. Tim, great to see you. Welcome. Bob. Yep. Frank, everybody's... Kobe says, can you show how you add the moving average of stop on the graph? It's in this layout. It's going to be there for you, Kobe, but if you want to do something different, then all you would do is add parameter, and under price volume, you will see the stop price. I don't see it because I've already got it on my graph panel. So there's the stop price down below. So once it's in your graph panel down below here, you can right click, add moving average. And again, there's the simple moving average. It starts out at 10, you can move it down to 5 and click on it and change the type to an area. And now you've got 5 moving average there as well. And uncheck the stop. The stop is this thin blue line. And of course, we know when price falls below that stop, you're going to get a sell rating. You know that's the line in the sand where you've got to get out, or at least consider getting out. You might stay in if price action is still strong. Give it a bit of time. But if your rule is to sell when you get a stop price, you better get out. All right, so I'll uncheck that. All right. Yeah, so Paul says, so there's a 540 cross right now. Yes, there is, Paul, right at the right edge. There's a 5 and 40 moving average of RT cross. And so you might be coming in a little bit early because the 40 moving average of RT is still sloping to the downside. So it might be a little bit aggressive, but when you look at price action, it's pretty favorable, isn't it? I mean, you've had another breakout above resistance. So that could be a very strong entry right there. You'd look at the industry group and the sector, maybe in a sector, maybe more so in the countries outside of the US, and just make sure everything is good there. But that's looking pretty darn good. Good eye. Chris says the NPI is still not populated within the UK. Well, I'm using the UK as my example, so please do call support, but I will as well. I'm not sure I'll catch the right person today for those that are saying it's not populated, but I have it. This isn't something I created. This is what I gave to VectorVest for them to add to all the countries. Does anybody have it in the UK? Can anybody let me know? And by the way, Ken here in Alberta says those that stop moving averages on that last stock, they're expanding as well, which is a positive. Yes, and ProTrader is needed to get the NPI searches breakpoint. It's not needed to run your graphs. Yeah, Paul says it's not there. Okay, and Stuart has ProTrader but doesn't have it. I'm sorry about that. Boy, we will make sure we get that fixed up. I hope the other countries all have it. I'm a little bit puzzled. But anyway, let's move on. I want to give time for our speakers. So we've kind of covered the layout and the searches. Most of my sort of back testing has been with graphs, using graphs, identifying, well, if I bought here and sold, here on the crossover, or sold on the moving averages that I put on my graph, Would I have made money? Could I have made money? If I sold on a bearish candlestick pattern, would I have made money? That's kind of what I use. But I wanted to put this in here because for the manual backtests that I'm going to show you just the results of them, uh, I kind of went along with the mindset of a long-term investor. So I stayed in the positions longer than getting out when the 5 moving average of the RT crossed the 40. This is certainly available to you up here as stop criteria. Notice I've got a few of them because everybody's different. Your trading plan is going to be different than mine, but I try to identify with the long-term investor, looking at the market conditions, looking at, if I'm in the money or out of the money, and just making a judgment, trying to be true to myself and true to the back test. Would I have sold on there? And if you go to VectorVest Canada, everybody has access to it, and go to my essay on June 30th, you can see the results or the stops that I used, and you can click here to watch a video on how to do the manual back test. All right. Yeah, Lee says the guppy was more colorful with all the EMAs, and guppy, or at least part of the guppy, the EMA squeeze, will be part of the next technical layout that we provide to you. Absolutely. Yeah. All right. So, all right. So here's the manual back test that I did in Canada. This is just basically a 3-year test, and I can tell you it takes a few hours. I use an Excel spreadsheet to mark where I'm going to be selling based on the graph, because once again, even though I put in the stop criteria, rec equals sell, I used the graphs to manually go in and sell. And the search was that NPI crossing 3 days, and I bought on the primary wave, and typically I went ahead and bought. Every time I got a crossover, I went ahead and bought. I didn't mess with that. Uh, there were some cases, I think maybe one or two, where clearly the stock price was extended, or the 40 moving average of RT was already at the peak when the crossover came, and I just canceled the purchase. I didn't go ahead. I think in only one or two cases. But anyway, it's a really good exercise to go through. You learn a lot about how you trade. You can see the percent winners is pretty good, 67%. Well, it's very good, actually. It's excellent. And a decent rate of return, very good rate of return, 136, and the drawdown, 20%. So keep all in mind, you're doing a manual backtest. You're looking at the graph to identify your exit, and you're using an Excel spreadsheet, or I was anyway, to identify when I'm going to get out. And then I try to get out at the appropriate time and try not to cheat. But obviously, you see the right edge. So there is that temptation. Oh, yeah, I should have stayed in. But there you go. And one thing when you're doing your manual backtest, and I think I mentioned it in the video, it's important here at the bottom to stop running when positions are closed. And that way, when you hit a position that the manual test wants to sell for you, you can go ahead and look at the graph and say, well, I'm not selling right now, or you can just let it go and sell. And then as my default, if I don't sell before the sell recommendation, I have my stop criteria to sell at that time. Yeah, Ken's asking, did you compare the two tests with the rec equals sell? And I ran about 10 different stop criteria, including the rec equals sell. And the rec equals sell did okay. I think it was about a 30% gain. But the manual test, because we're using moving averages to exit, the manual test was clearly the preferred method. Let me just have a look here. I'm just gonna pull over Canada for a quick second and just have a look. So there's that one. Let me just pull this down a little bit. So there's the sell. So the sell rating is my stop criteria. Running this as an automated test, I had 55% winners, 16% annualized rate of return. Drawdown was 24%. So these are some of the tests that I ran automated because I did want to compare how it would do in an automated test. But clearly the manual using the graphs was the best way, and you'll learn an awful lot about it. So Stephen, to change, you don't have to change from US to Canada. You can leave your US software open, but when you go to log the login again, make sure you click on the Canadian flag, and it'll use the same username and password, and then you'll have Canada and the US open at the same time, and that's perfectly fine. And I've got all 5 countries open right at the moment in case any questions come up. All right, so spent a bit more time on that than I was expecting, so I'm going to fly through some of this because I really want to give Phil his time to share with you what I think is some pretty exciting use of the Elliott waves to identify stock price cycles, and well, he's going to explain it all. If you're like me, the first time you hear about Elliott waves, your eyes kind of gloss over. But Phil has a way to explain it very nicely for us. So, all right. So I had one of our friends from the U.S. Asked if I had done a U.S. manual backtest, and I hadn't. He had done one just over the last year. And you'll recall it was a really difficult year, right? It was basically a confirmed down market condition for almost the entire year. So it was a really tough year. But in my manual backtest, again, with any biases, and I tried to be biased, to the negative side, and catch myself if I was being too positive. But anyway, and I used basically the 1-day crossing search with just 50,000 average volume. For some reason, I did change that to 100,000 later, but anyway, so I think I used 50,000, but basically the same setup. But this one, we managed 73% winners, 62% annualized return, which was the same as the compounded rate of return because it was basically a 1-year test. And the drawdown, again, because we were in a confirmed down, I didn't hesitate to cut my losses if I had a loser and take my profits. And so all I'm saying is this is maybe a little bit bold in terms of the results. And I'm pretty sure in real life, I know from my own trading, and I love the NPI, and I'm using it virtually every time we can on a primary wave to the upside. I just know that this was probably better than you're going to get in real life. Does that make sense to everybody? Yeah, and people are chatting in different ways that you can test, or different stops. And listen, you can test them all. So you can test them all out and see what you find out. Now, Paul has a really interesting idea here, saying he had success with the time of search with the RT below 0.7. So that's something I tried as well, Paul, trying to catch those stocks in the trough, right? I mean, that's the beauty of them, is when you can catch them in the trough. Let's just go to Canada here, and I'll just go to the Unisearch. I was just looking at Delta stocks that had a greater than 40% RT delta with this search. And let's just graph these guys just to see if there's an ideal setup. So from Paul's perspective, he's more inclined to buy over here at the right edge when the RT 40 moving average is less than 1 over here. Here's the crossover that's sort of in a valley, but the RT 40 is already well above 1. still pretty good results. So here's a situation that would kind of meet Paul's criteria, where you're in a trough of the 40 moving average of RT, and let's see where it is. It's 0.74, not quite below 7, but you're still getting in at a pretty opportune time. Now, you're not always going to catch it right at the bottom, and so you do have to be patient sometimes. And this one, I probably, if I opened a position on ATA in this case, it would have been a small position because the 5 moving average of the 40 on stop, it is rising, but it's below the 40. So my preference is always to wait until we get something like this where price is at least above the 40. And if you wait for the 5 to get above the 40 on the stop, you're still okay. All right. That's all good. John, I did not test using weekly charts, but I love the weekly charts on this setup. Let's just go out 5 years here. Because quite often, this is what you're going to find on a weekly chart. You're going to find the stock has been in a fairly lengthy channel, and then you've got the breakout. You've got the price or the buy rating turning to a buy, and you've got a nice entry from a valley. And so using the combination of price action and the 5 crossing the 40 of RT, boy, pretty good, and a buy rating. Yep, Paul says in the trough. You got it. Yep. Yeah, it does work for the downside. If you're an options trader, it can be very powerful, especially, well, both ways, calls and puts for options. It's pretty darn powerful. People have been emailing me and saying it's a game changer, and that's what I called my presentation because I think it is a game changer. It's such a simple thing, and it's been right in front of us. I mean, it's the Midas Touch uses the 40 moving average of RT as a key element, and the 5 as a kind of an alert. Well, it's just putting them together in this way, and it just has worked out beautifully. So here's another one. You've got a kind of a more of a triangle here than anything else, but pretty darn good. All right, listen, I'm going to move on, but I hope this is helpful. Betsy says, do you have a handout, or can you tell me where to find it to explain how this all works? Yeah, again, if you go to my essays here, when I just showed you, and you'll see the video on it, and I think that's going to help you a lot, Betsy. And of course, if you have any questions once you get into it, please do call our support team, and they'll be happy to guide you a little bit on it as well. And join us on the Tuesdays here in Canada. I'll just there's the essay on 6:30. I've written the first one actually was on February 18th. That's when I first introduced the concept, so you can go there and read about it there. And I kind of gave the criteria there for a good buy. So just talked about RT being excellent on its own. Oh, and on February 14th, Jim Penna did a special presentation video on the NPI as well, which was excellent, better than I can do. So February 14th is the special presentation, but this one tells you about that. But here, if you want to come to our Q&A on Tuesday, you can register if you're not already registered. We auto-register the Canadian subscribers, but here's the Canadian Q&A, and just register and join us August 9th at 12:30 Eastern. Okay. Okay, I'm getting lots of ideas on what I can do for exits and entries and everything else. But for now, I think we've got a pretty darn good layout, and we're not finished developing on this. So stay tuned for sure. There's going to be lots of great stuff. I want to move on. Just to let you know, the market is kind of still in a perilous place in some respects with rising inflation and the Ukraine war and now China. There's just issues that are still with us. And so Glenn Tompkins did an excellent video on yesterday, and I just thought if you haven't seen it, just go to our VectorVest YouTube channel and search on Glenn Tompkins, and here it is. So just a really excellent video. All right, quickly on the markets, our usual, I just kind of put the color guard information together, and we can kind of see how global markets do work together or do rise and fall in unison for the most part. Not always, but quite often. And so in Canada, we're still down 13.5% year to date, but you can see we're starting to see some green in the color guard here and in the price column. And the asterisk means the RT kicker is bullish, showing there's momentum behind the move. So looking a little bit better, but notice our buy-sell ratio still down at 0.39. So not a real healthy market just yet, but the MTI is in that trending phase now at 1.02, and we're in a confirmed up call as of yesterday. And so here's the US market. So little longer for the confirmed up call, came a little bit earlier. And in fact, the MTI is at 1.43. So, typically around 1.5, 1.6, we start looking for a top in the market in the US. So we're not too far away from that. Australia, very similar market to Canada, lots of mining and so on. And MTI 1.18, lots of green lately and confirmed up call since July 29th. UK still down 10.6 for the year, and currently VectorVest is advocating caution because of these three yellow lights. The buy-sell ratio fell quite strongly on Friday, and the MTI 1.29 up situation on the trend. And Europe down 11.0%, and three yellow lights across the top. They are in a confirmed up call, but there you go. So these are over the 1 month. It's just really been the last couple of weeks that the market has started to rally again in all our markets, and so the 1 month gains aren't really excellent. Yeah, John, thank you for that. He says, this is excellent. Click on the like button. Yeah, it helps us grow our attendance at these events and grow our membership. So if you click on the like, we appreciate it. Oh my gosh, I copied the June color guard in Europe. How the heck did I do that? Europe, the software gets updated a little bit later than the other one, so I was working on it pretty late. I'm not making excuses, but I guess I'm making excuses. Sorry, this is Europe. Oh my gosh, three yellow lights. The MTI is up at 1.4, so a little bit of concern there. And the buy-sell ratio is pretty good at 1.53, but a pretty big dip on Friday. Thank you, Chris, by the way, for letting me know. Yeah, and Dirk. Oh, thank you, Sue. Clicked on the like. So that's kind of where we're at with Europe as well. Hopefully I got the information correct down below. So just a search that's quite easy to do, top RT Delta industry groups. And what I do is return stocks, even though I'm looking at RT Delta. I'm returning stocks sorted by value, safety, timing, but the 10-day RT on the industry group must be greater than 40% in this case. So So just a way to find stocks that have a strong RT, they're moving up, and the industry has a strong RT moving up, and these are the ones that I came up with. And of course, I won't do this for all of them, but I'll just have a quick look here. So I think I saved it. Oh, maybe I saved it down here. Okay. Okay, so just running the search, and again, you got to remember to change because you're starting from a industry delta here, returning stocks, but then you can just run your graph. Here's Sigma, lithium. So we'll kind of want to keep an eye on the lithium industry group in Canada. And pretty big move even since the crossover. And you can just go on down. Here's this ATA again, and it actually crossed over back here, but still moving up pretty nicely. So you get some pretty good ideas. Kind of a channel here, breakout with hut mining, so that's kind of crypto. And well, you get the picture. All right, I'm worried about the time. All right, so US, what I really wanted to point out is how energy clean with the Inflation Reduction Bill that's potentially going forward in the U.S. Senate side. All of a sudden, energy clean, the TAN, the ETF, and others started showing up on my radar, and you see it here. And uranium, again, related to the climate side of the inflation bill. So just got to keep an eye on those sorts of things, and this is a great way to do it. Stuart says you've doubled your likes in 2 minutes. I wish I had the same with the shares that I buy. Don't we all, Stuart? Thank you. And Breakpoint says watch STEM, STEM. So, and then here's the top gainers in the cherry picking watch list folder. We've got global markets, so you can filter on that as a search. So Bill has been making pretty good ground here with a 14% gain over the last 10 days. And Turkey, but there's the Qs, there's the Russell 2000, there's the SPY, S&P 500. So they're all starting to make moves. And we can also look at market sectors. Here's TAN, again, that's sector energy, up 17% just in the last 10 days. So just something to keep an eye on. And again, I'm not going to spend a lot of detail on it, but just pull the US over here and in the Viewers tab, watch list viewer. There's the cherry picking folder. And there's your global markets, there's your sectors, okay? And the search is quite easy to do. Let's just see, I don't think I saved it, but I'll just really quickly to show you how it can be done. We go to the Delta, searches industries, and 10-day price delta, and it fills it in with 10-day sorted. And then what you'll want to do is go for stocks, filter by, watch list, equals under the operator. Under value, you're going to come down and go to that cherry picking folder. Just choose the global markets, for example. Make sure you, instead of returning industries, you're going to return stocks. Even though you're searching for industry price split adjusted, you want to see the stocks that are coming out. So, and then you just run it. And if you like this kind of a search and it becomes one of your daily search routines, make sure you save it. This is the save icon right up here at the top. Okay. It takes too long to run. I'm going to close it out. But that is the search. So you can always review the replay if you need help with that. All right, it's taking a bit of time here. I'll let it run, but all right. Market timing, just a couple of things to note. On the Canadian side, VectorVest says, everything is moving up. Technology, gold moved the price higher. Nevertheless, as uncertainties continue to dominate the market, keep an eye on the color guard. Notice we did just cross above the upper channel and the 65-day moving average. MTI just crossed above 1, and so that's what gave us the confirmed up call. Derby winners, interestingly, on Friday were all bottom fishing. All bottom fishing. On the Australia side, the market timing system's all bullish. Let's continue to play to the upside. You can see again the color guard, and same type of charting here with all of our countries. A breakout above the 65 and a confirmed up call. And the UK, same channel, did dip below the channel quite a bit back here, but basically that was the channel. And now we've got the confirmed up call, having broken above the 65-day moving average and the MTI above 1. And Europe, I've still got the June. Gosh, I hope this didn't come from June. But anyway, heed the advice of the color guard is always a good cautionary thing. And the confirmed calls in Europe are a little bit different because they use the buy-sell ratio greater than 1 or less than 1 as one of the criteria, whereas the other countries outside of the U.S. Use the MTI and the 65-day moving average. Yeah, Jerry, you can definitely add the NPI criteria to Delta searches. Lots of things you can do. If you need help with that, just call our support team. And Ken says the SPY looks good on the NPI chart. Yeah, there's just so many. You can use it for indices. There's just so many things you can do. Have I got the SPY here by any chance? So there's the SPY there. So it just crossed recently. The only thing about the SPY, Ken and everyone, that I would say is just we're kind of at this resistance level. So just got to be a little bit cautious there. But I would say we're in a trough and starting to move up. So if that continues and we break above this resistance, we've got room to go. VIX is still falling, but right at a support level. So we'll see what happens from there. And the VIX is the inverse to the SPY. So if it starts to rise, then the S&P 500 could pull back a bit. All right. Listen, I've taken up a fair bit of time here. So there's the U.S. The Derby winners are all different, but very similar situation. We've had the breakout. We broke above the upper channel. MTI is rising. So MTI at 1.4 or so, just be a little bit cautious there and watch that color guard. And there's the divergence. They talked about a divergence with the buy-sell ratio. It's just very slight. You can see it here where Friday the buy-sell ratio was lower than earlier in the week. So there is a bit of a divergence with price. So there's a bearish divergence between price and the BSR. So it suggests upside potential is dissipating. So be a little bit cautious. And the emotional market cycle, buy-sell ratio 0.39, the MTI in Canada 1.02. So we're in the optimistic phase. And this is kind of the trending phase as well. So let's hope it continues. When we get up to 1.3, 1.2, 1.3, 1.4, then that's kind of the greatest risk of loss. And the US side, the greatest risk of loss is around 1.5, 1.6. And MTI in the US is 1.43 right now. So a little bit of room to go, but just be a little bit cautious there. All right. Okay. All right. Gosh, we covered a lot of ground, everyone. Listen, what do you all think about the market? We've kind of given you the graphs and talked about it. You certainly can go and listen to the market timing reports in all our different countries. But give me a 5 if you think we're ready for another pullback, and give me a 10 if you think it's all systems go. And anything in between, I'll take as a bit of indecision. But just kind of, yeah. David C says beware the July high. I'm seeing some 5s that we gotta follow the color guard. Becky is a 7, so just a little bit more cautious. Don says 5 and 10. Basically, got to follow it day to day. So a lot of 5s. So people are, I mean, we've come up off the floor, right? And I think there's a lot of good things happening. The jobs report on the U.S. side, at least, was incredibly positive or bullish. So we'll see where it all ends up. Glenn's video on YouTube will help sort out some of the issues for you as well. Yeah, and Breakpoint says depends on the inflation data on Wednesday, so keep an eye out for that. All right, and Paul says Mr. Market does what he wants to do. All right, well, listen, Phil Logan is standing by to give us an introduction to Elliott waves, swing trading from daily charts, pattern recognition, just putting probability on your side. And I know from the comments that come into the chat in our Tuesday Q&A that we have some members that are really strong on Elliott waves and believe it's an incredibly powerful way to predict price in addition to the other tools that we have. So I'm really grateful that Phil has volunteered to give us some insights. He's a longtime user of Elliott waves and has a really nice way of explaining it. And so very, very glad to have Phil with us. Now I just have to make sure I make him the presenter. So Phil, if you're all ready, I'm going to give you the presenter and you'll have to accept that. And there's your microphone. I can hear you.
I think I'm all set, Stan. Can you hear me?
Yes, I can hear you, absolutely. And so you just need to get to your PowerPoint and then you'll be all
You
set.
can hear me all right?
Yes, I can hear you, Phil. I can hear you. You want to shout it out again? Is everybody able to hear Phil? Certainly. Phil, try it again. Okay, Phil can't hear me. Okay, I'll just tell Phil to go ahead. We'll get organized here in a second, everyone. Yeah, he was there, not now. There we go. We see your slides.
Stan, can you hear me at all?
Yeah, I can hear you. We all can hear you. Okay, I'm not sure why you're not hearing us, but we can hear you. Okay, are you all set, Phil? Check, check, check. I know my sound is on. Phil, shout it out again. Oh, yeah, we're not hearing Phil now. Check, 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 Phil. Let's Okay, Phil, we can hear. I was hearing you. Can you try it again?
Okay, Stan, can you hear me?
Yes, I can, Phil. I think you're having. Can you hear me at all?
Yeah, here's the problem. I'm now unmuted, but in order to hear your sound, I had to go to um, YouTube in order to hear you.
Oh, well, if you go back to your slides, we should be able to hear you. Try it again. Yeah, try it again. Do a check, check, check for me.
Check, check, check.
I can hear you just fine. I would say go ahead, Phil. Everybody can hear Phil?
Okay, I'll begin. I'm getting my own voice coming through about 4 seconds later. Um,
Uh, yeah. Okay, let me have a look here. We'll get this figured out. Okay, we're seeing your screen.
okay, that's good.
If you go ahead, I think you're all fine.
Okay, I'll begin. I'm just going to. There we go. Okay, I'm getting a little reverberation of sound on my end. Hopefully it's not coming through on yours. And I'll just go ahead with my presentation. So welcome everyone to an introduction of Elliott waves. I'm looking at swing trading impulse waves on weekly and daily charts. I do realize that there's people out there who probably have never seen anything like this before in their lives, and other people who probably need a more advanced workshop. This is going to be an introduction. So Elliott, the person that we're studying here, was living around in the turn of the century in the 1900s. And the main thing about what he did was in the 1930s, he was in his 60s, and he developed his wave theory after analyzing about 75 years of market data. He found that price oscillates in waves that form 13 common patterns that repeat over and over again. In the 40s, when he was in his 70s, he applied his theory to the psychology of mass human behavior. And I'm sure what he was looking for is a reason why these patterns kept repeating themselves. This is my disclaimer. This presentation is for educational purposes only. Each participant assumes full and sole responsibility for investment decisions in developing personal trading plans. In order to recognize patterns, I believe firmly you have to do these three things. You have to step back and take a really holistic view of the price charts. Call it the big picture view, the global view, whatever you like. The more you step back, the more likely the patterns are going to be clear. You need to use your judgment to classify pivots as critical to the shape and structure of patterns or as noise. In the grand scheme of things, there are thousands of people coming in and out of the markets every day. Price is going to spike up, spike down. There's going to be little bubbles here, little bubbles there. A lot of it is noise. So you have to learn to use your judgment to find the critical pivots. You also have to step back and self-assess the application of rules and guidelines. Now, the information that I have for you comes from really two sources. I did the course materials for the Canadian Society of Technical Analysts years ago on Elliott waves, and I used textbooks. I do not go to the internet for this topic, and I do not use software. One of the textbooks that I like very much is Technical Analysis for the Trading Professional, written by Constance Brown. It's still in print as far as I know, and there's a foreword by George C. Lane in that book. Now, there's a few points of knowledge that we have to have. Pattern recognition is what I really like in order to put probability on my side. This is what I really like about the Elliott wave theory. the patterns tell me when probability is highly on my side for a long trade or for a short trade, or when I shouldn't even be in the market at all. Now, the patterns themselves can chain together very smoothly, go just going from one into the other as if there's no glitch whatsoever. Patterns do overlap, which means that one wave may complete one pattern and start the next, serving double duty. Other times, the market gets into a state of indecision and it doesn't know which way to go. The price oscillation has to adjust to a new pattern, and those usually connect using what we call X waves. Elliott says X waves can be any three-wave pattern. Sometimes, as you may see in this presentation, they just look like a blob. They really have very little structure that you can see on a particular time frame. Patterns have a very high probability of completing. That's really important because if you're setting a target at an extension zone, you have a high probability of that order being completed. Patterns do fail. And that's what has happened last December and January to all of our major markets in North America. The S&P 500, the NASDAQ, and the TSX composite all showed failed patterns, what Elliott called wave 5 truncation. Nice big word, but it simply means failure. They fail mainly because of major political or economic events. We've had a few of those. Declarations of war, tensions between US and China, economic events like the central banks deciding they're going to slow down the purchase of assets and start selling assets back into the market. I think that's what happened in December and January to cause the decline. We're facing inflation prints. We're facing decisions about interest rates. There's a lot of major things going on right now. Now, Elliott wave analysis works on any time frame at all. It obviously looks different, and I just want you to think about this for a second. One trading day consists of 6.5 hours. On your daily chart, you get the high, low, open, and close, and you get no record at all of what the price oscillation is happening during the day. If you go down to a 1 minute chart, you explode a daily candle into 390 candles. Obviously, a lot more detail. On a daily chart, 1 year will have 250 trading days. On the 1 minute chart, 1 day will have the equivalent of over a year and a half. Now, what happens is the patterns that occur on the minute charts push their way up into the hourly charts, which push their way up into the daily charts, which push their way up into the weekly charts. That's how the whole system builds. Now, the naming convention is very simple. It's numbers for uptrends and letters for downtrends. This retracement extension zones, this is not Elliott. This has to do with the mathematics of growth and decay curves, and these are the values that I use. VectorVest allows 7 slots to put in the ratios that you want. VectorVest even orders it in numerical order for you, so you don't have to worry about them being put in order in the beginning. The last one here, the 261.8%, I sometimes toggle to 23.6, but I keep 261.8 as my default. Now, I'm going to gloss over this side very quickly. This is intended as a summary for the participants in this workshop. There are 3 general types of waves, and they always subdivide into groups of 3 or 5. The corrective waves are the zigzags and the flats. Those are 3-wave patterns. The triangles are 5. The X waves I've talked about. I don't have to say anything more about that. The motive waves are extremely important. This is the place where you make the money. Motive waves move in the direction of the major trend. They're always 5-wave patterns. The impulse waves are always 5s, and corrections are always 3s. Impulse waves can extend. We'll need to look at that. And if we'd done this a month ago, we probably wouldn't have seen any of these wedges in here. Elliott calls them ending diagonals. and leading diagonals. The ending diagonals are in the last impulse wave, and the leading diagonals in the first impulse wave. Now, I'm also going to gloss over this a little bit because I have to show you these to make sense. I don't know of any system in the world that only has 3 rules and 3 guidelines. There are rules regarding wave 2, wave 3, and 4 that I will show you, and there are guidelines of alternation, equality, and support. Put on your sunglasses. I didn't know this was going to be so bright. After a little sip of water, this is an 8-wave pattern that represents the full cycle of an Elliott wave pattern. I do draw these a little bit differently than what you might see in some of the textbooks, but I do that because of the rules and the guidelines. When I first saw this, I was quite blown away by it. When you break it down, it's not that bad. Let's start at the top. The full cycle consists of 2 parts. The motive wave, which is labeled as waves 1, 2, 3, 4, and 5, down here. This is the motive wave. You can see I've drawn a guideline here and labeled it as motive to the left. 1, 2, 3, 4, and 5. Then there's the corrective wave, ABC. Now, I just randomly decided to draw a zigzag here, A, B, and C. The motive wave consists of 2 parts. The impulse waves, 1, 3, and 5. There's 1, there's 3, there's 5. Obviously, the price trend is up. This is when you want to be in the market for 1, 3, and 5. The corrective waves are 2 and 4. That's this one and this one. And this is where I draw it differently. Because of something called the guideline of alternation, I don't like the fact that a lot of people draw 1 and 2 just like this. Then they draw 3 and they draw 4 looking exactly like 2. And folks, that just hardly ever happens in the real markets. So I change it. The guideline of alternation says that these 2 corrective waves have 3 properties that must vary. One of them is, what happened to my mouse? There it is, sorry. One of them is longer, one of them is shorter. One of them is more sideways, one of them is more of a pullback. One of them is more complex, one of them is simpler. It doesn't have to occur in this order, but those 3 characteristics, the angle, the complexity, and the length, those are the things that the guideline of alternation insists on, and that is very important. Now, the rules themselves, the rule for wave 2 here is that 2 cannot retrace more than 100% of wave 1. That makes sense because if it did, we'd have the price way down here and we'd have a new low. And that means we're wrong. This isn't a wave 1. The rule for wave 3 is that wave 3 can never be the shortest. It can be the longest, it can be the second longest, but it can never be the shortest. Okay? The rule for wave 4 is that it can never retrace back to piercing the top of wave 1. If I had a line across here, just imagine one being there, wave 4 can never retrace that far. Okay, now, how do you trade something like this? Well, you get a downtrend that forms a pivot or swing low, and you have to have some way of getting into wave 1. The most aggressive signal is the idea of the VectorVest green light. Once you have a candle, there it is. Once you have a candle that closes higher than the close 5 days ago, you have a trigger. The following day, as long as you get follow through, you have confirmation of that signal. That is very aggressive. Trading wave 1 is very aggressive because you simply do not have much history. Many traders will wait until wave 1 and 2 form, and they'll get into wave 3 once it eclipses the top of wave 1. So the trigger is getting higher than wave 1, the confirmation is follow through above that. There are lots of people in the world who only trade wave 3s, and then they move on to something else. Now, once you get to the top of wave 3, you, just like at the top of wave 1, the top of wave 5, you have a decision to make. If you're swing trading these impulse waves, your exit points are set for you. If you ride to the top of wave 1, you get out. If you ride to the top of wave 3, you get out. If you get into wave 5 and ride to the top, you have to get out, because this could literally be Armageddon. This could be very, very dangerous. You're at the top of the motive wave and you have no idea how this correction is going to form. So, in a nutshell, to trade impulse waves, you get in and ride to the top, you get out. Let 2 do it at once. You get in on 3, ride to the top, get out. Let 4 do it at once. Get in on 5, ride to the top. But here, you have to get out. Now, on the corrective side, the first wave will always be counter trend. So this is a fairly high probability a high probability short trade. When you cover, I recommend, like I've said here, beware the B wave, never to trade these. These are counter trend moves within counter trend move. They can be very dangerous. C is a fairly high probability short trade. It's maybe not as good as wave A. Here, my mouse seems to be disappearing. But you really have then 5 chances for high probability trades. Long on 1, 3, and 5, short on A and C. Okay, now I'm going to show you this in the opposite direction, the bearish cycle. I won't spend as much time on this because I think we've got the idea. You have an uptrend to a pivot high or swing high, and then we have wave A moving down. You go short on wave A, you ride all the way down to the bottom, and then you get out. You let B do it at once, you get in on wave C, ride it to the bottom, then you get out. Let D do it at once, and then ride E to the bottom. Now, at this point, whether you're on the bullish trend on a wave 5 or the bearish trend on a wave E, if there's going to be a pattern failure, it's more likely to occur in E or it's more likely to occur in 5. That adds a little more danger. Now, in the corrective phase here, I've drawn a flat. The wave 1 is counter trend. Okay, so it is going to be a high probability long trade. I don't recommend trading wave 2. Beware wave 2, I've got here in my notes, because you don't know what it's going to do. You could get in here and all of a sudden have to get out within moments because it decides to be a zigzag and move up. Or it could go all the way down here most of the way and decide to be a triangle. You don't know. So if you want to sleep at night, stay out of these. In wave 3 on a flat, it's quite likely that you can have a fairly high probability long trade here. Now, on any of these full cycles, there is nothing about these cycles that tells you what the next cycle will look like. And that frustrates people because they want to think, oh, look at this marvelous downtrend, I got to go long. The TV tells us to buy the dips all the time. Buy the dips all the time. Well, that's not bad as long as you realize that you're in a corrective phase and things could turn on you very fast. Now, I have to talk to you about extensions because they're all over the place. This pattern here is one that is incorrectly labeled. It's just plain wrong. Wave 3 is too short. It can never be the shortest. And I want more in 2 and 4 in terms of the guideline of alternation that is what is here. What is correct is 1 and 2. And there's 1 and 2 on my diagram. What is labeled as 3 is actually minor wave 1 or wave 1 of 3. what's labeled as 4 is actually minor 2 or 2 of 3. What's labeled as 5 as minor 3 or 3 of 3. And there's nothing else here. But what we have to anticipate is there has to be a minor 4 or 4 of 3. There has to be a minor 5 or 5 of 3. And what have we had happen? What used to be on my stick drawing as a straight line up here is now a full motive wave. This is a cycle within a cycle. And these things happen a lot. After the top of 5 of 3, we have to move back to a major correction in wave 4, where I've drawn a zigzag here, and then a major wave 5. I ran out of paper, so I couldn't draw the corrective phase over here. But there's something going to happen over here that corrects the whole thing. That is a wave 3 extension. Now, I got to look at the zigzags, and I've got more information here than we need for an introductory workshop. But the zigzags are corrective, they're diagonal, and there's 3 waves. And they break down into the 5-3-5 wave pattern. This is where you need to concentrate. The stick drawing of a zigzag, A, B, and C. Now, wave A is a 5-wave pattern. I've drawn it down here. Hopefully I'm not driving you completely insane. A, B, C, D, and E. Wave B is a 3-wave pattern, 1, 2, 3. And wave C is a 5-wave pattern, A, B, C, D, E. The question is, can you really see this when you're looking at, say, a daily chart or a monthly chart? Sometimes you can, sometimes you can't, sometimes it's challenging. I've drawn a double zigzag, which is a pattern that Elliott recognized. It's just a zigzag connected to a 3-wave X wave and another ABC. It is essentially like a major wave A, a major B, and a major C. It's like a big 3-wave pattern that breaks down into a double zigzag. B, top of X, and B here form a downtrend. In a double 3, we have an ABC, and the X wave rises above this B before we get ABC again. And yes, Elliott does recognize triple 3s. Now, here are the flats. The flats are corrective, they're sideways, but they break down differently. These are 3-3-5s, not 5-3-5s. That means that wave A is 3 waves, wave B is 3 waves, and wave C is 5. Here it's all drawn out in its first order. A, B, and C, 1, 2, and 3. And then we've got A, B, C, D, E. The expanding flat is what happened to the TSX composite in, I guess, January. We'll look at the date in a moment. It formed an expanding flat where wave B, here it is. I don't know why my mouse is disappearing. Wave B rises above the top of wave A, like the beginning of wave A, and forms this bull trap. If you're one of the people that listens to the TV and they tell you to buy the dip, you might be buying in here. You might be writing this up and saying, wow, am I ever smart? I'm going to buy the breakout. Well, the pros have a surprise for you. Right up in here, they have a whole bunch of borrowed stock that they're waiting to sell to you. And when the market makers match the breakout buyers up here and the dip buyers here with the borrowed stock, whammo, down it goes. So be very careful with these bull traps. The interesting thing is what they did to the TSX composite is they produced a new high in a corrective pattern. My mouse is disappearing. Oh, well. This is called a running flat. This is something that I think Elliott really thought these were just expanded flats. A, B, you get the extension up above here. C doesn't come down as far. That's all there is to that. I'm not going to spend a lot of time on triangles because I think we know what they are. The ascending triangle, the descending triangle, and the converging triangle Elliott considered those all to be converging triangles. The only difference is that in the converging trial, we have diagonal support and resistance, whereas in the downtrend of the descending triangle, we have a flat support line, and on the ascending triangle, we have a flat resistance line. They tend to break out on the, this is a bullish pattern, so they tend to break out by retesting and going up, but they don't always. I'm going to show you one of those in a minute. In the downtrend, the this tends to break down, test, and then go down. This can actually go either way. This tends to be a little more of an indecision pattern. If it goes positive, then it will break and go up. If it turns negative, it will break, test, and go down. I'm not going to say anything about expanding triangles. I'm going to move on to my last slide. Now, sometimes waves are hidden. So we have I've just drawn a Maribozu, a doji-like candle, and another Maribozu. Suppose this is one day where the market opens here and goes down. Then the next day, the market gaps down here, and on day 2, it goes to the bottom. That could be the end of a wave C. On day 2, somehow the market gets from the low up to the high, and we end up with what could be an entire wave D. Then on the same day, day 2, the market goes down and closes at the top of this real body. The next day, the market breaks down here, gaps down, and goes down to the end of the Mariposa candle. That could be an entire wave E. All I want you to know from here is that it's very difficult sometimes to see the waves. They could be hidden within the candles. I'm leaving this for reference only. These are Elliott's 13 patterns. I think I've talked about them all somewhat. I haven't shown you the ending and leading diagonals, but you're going to see one of them in a moment. So what I'm going to do now is escape this, and I'm going to go into VectorVest Canada. I'm going to go to my home screen, and I want to look at the S&P 500. But I'm going to do that from the Canadian perspective and pick the XSP here. The XSP is a non-leveraged ETF that I use to trade the S&P 500 in Canada. I'm going to go to the stock graph. I'm going to make that bigger, and I'm going to go to weekly 5 years. Now, I want to show you this green trend line, which I started drawing because I wanted to know the answer to the question, what would happen to the markets if earnings stayed pretty much the same, fairly strong, and we didn't have the COVID collapse, and we didn't have all of the stimulus that drove this market up to its high? So that's what the green line is. Now, I guess I'm going to have to do this so that you can see everything. And I'm going to have to get this out of the way for the moment. The other thing I want you to see is this head and shoulders pattern. I don't know if you remember back when this formed, according to my date line back in, you can see December 29th, but there was a lot of chatter about it forming. And of course, no one knows whether or not it's going to complete, but it did. On the real S&P graph, the target of this pattern was about 3618. On the actual S&P, it went to about 3636 and change, which puts the projection within about 0.5% of what actually happened in the market. And now what we have is the confluence of two supports. This makes me think we've got a bounce going on, and we do. How far will it go? Will this go? Is it over now because we've kind of got a lot of the stimulus out of the market and we've retraced to a mean level? Are we going to bounce and go up? Are we going to go back, retrace, bounce again? Are we going to come up, retrace, and go down? I have no idea. There's nothing about these patterns that tells us the answer. But now, on this graph, I've already marked wave 1, 2, 3, and 4. I don't have room to mark 5 up here because there's no room on the graph. Okay? But here's wave 1. It has a little bubble in here, and then it goes up and forms what looks like a flat for wave 2. Then we have this long wave 3. We have a wave 4, and then we have wave 5. Now, the first thing we have to look at is the fact that the guideline of equality says that wave 5 and wave 1 should be about the same length, or they should be in a ratio of 61.8%. They aren't. That's probably because during this time frame, all the central banks of the world were saying the same thing. We're going to slow down the purchase of assets. We're going to start selling them into the market. And that was enough to hammer this into the ground. It looks kind of like somebody took a sledgehammer and started smashing it down. The bulls tried pushing it up here. They tried pushing it up here. They even gapped it. But it sold off, and that was the end. That is a wave 5 truncation. That is a market failure caused by very serious events in the outside world. Now, how do you trade this? Well, I'm just going to go down here, and I'm going to turn on the do. And I'm going to look at what the do does. Personally, I think this is kind of incredible. I can't tell you that this is going to work all the time. But if you entered XSP or you entered the S&P 500 in the States on the do signal and got out on the next do down, you would have captured all of this wave. Now, I'm going to change that. And I'm going to turn on the confirm call. On the confirm call, whoops, let's get that back here. Okay, there is a whipsaw there, but if you had my magic green line on, you might not have sold because you're sitting on support and you don't have a lower low. If you do get whipsawed out, well, the next one has you capture virtually all the way 3. And you could have been in this for years. If you come up here, oh, it didn't work too bad on the confirm call. But once you start hearing events like we're slowing down on the purchase of assets, and you start seeing this gobbledygook up here, it's probably a good idea to get out because you have no idea what's going on over here. Okay, now down on my oscillator, I'm just going to turn off the RT40 because it's important to see what's happening here. This 5-period moving average of RT is so good at the V bottom here, it catches the last candle of the downtrend. The first candle of the uptrend is captured right here. And look at the blast off in momentum. I don't see how you can miss that. That is absolutely incredible for telling us that the market has turned for the good. Now, I'm going to have to go in here. Oh, now what I can mention here is you can see here that the corrective phase so far in the S&P 500 has been a very large zigzag. We got this wave going down, which is 5 waves. We've got a connector wave, and we've got another 5 waves down. To see that, I'm going to go to the daily graph. I'm also going to get a drink of water. Now, no, sorry, weekly. I'm going to go to daily. And I got to go to probably, let's do 9 months. Okay, first thing is when we move to daily graphs, you're going to see a lot more detail that you didn't see before. That's okay. Use your judgment to find out which pivots are really critical. Here's a wave A, a B, a C, a D, and an E. That ends the first piece of the zigzag. We then have a rather weird looking three-wave pattern. You could label that as an X wave, you could label it as a B wave, it wouldn't matter. But it's really weird looking, isn't it? It almost looks like a flat with an extension of the third wave. But that's the way things go. We then move into a much cleaner wave, which doesn't surprise me because now we're getting farther and farther away from all the mishmash that's going on here, the war between the bulls and the bears. We've got a wave A, a B, a C. We have a expanding triangle for D and an E. That completes wave C. So we have the zigzag A, B, C. Now we have another one of these funny looking X waves or zigzags, whichever we want to classify it as. It looks exactly the same as this, doesn't it? Only a little smaller. That's not uncommon. We've got a little channel across here that looks a bit like a flat, but there's not a lot of detail in this time frame. This date right here is critical, June 8th. That's the last day that the petroleum sector was in an uptrend. That was actually the end of wave 5 of the petroleum sector. As the market's going down and the petroleum sector finally dropped, we had this crash in the market. We then moved into a corrective triangle here. And this is rather an interesting thing because look at these candles down here. What are the market makers doing down here? Well, they're running the stops is what they're doing. People who trade triangles often put stops just below, right in here, perhaps down here, and certainly they might move these up. Some of their stops are trailing stops. And before the market makers are going to take the market up, they're going to want to run these stops and get any sellers right out of the market. They gap down, bring it up. They gap down, go down a little bit, bring it back up. Then the market breaks out and we've got a wave 1 and a 2, and we're into a 3. Now, how aggressive are you? Do you want to wait until wave 1 is complete, wave 2 is finished, and then get in on the breakout? I like that personally because it's safe. This candle is your trigger. Confirmation is not on this lower wick. Confirmation is when this candle rises higher. So I would suggest waiting till near the end of the day to make sure it really is up here. And then that for me would be the buy. Now, this isn't a very long wave, so I'm not sure what's going on here. I'm expecting at some time there's going to be a wave 4, a correction, and that's what we might be in right now. Okay? Now, that's all I really have to say about that one, so I'm going to close it off. I'm going to look very quickly at the TSX. Let's just get this up here. And it's a similar structure from what I did before, but you might notice that this trend line is higher. The TSX composite has a large energy component, and with energy running so well, its pattern is a little higher. We still have waves. I got to turn confirm calls off. We still have waves 1, 2, 3, 4, and 5. It's still a wave 5 truncation. There's nothing new there. But what I need to do is show you how this completes. Not weekly. I want daily. Let's try 9 months. Let's do 1 year. Yeah, that's better. Okay. Now, This is a little harder to see because there's just so much noise in this signal. The market's going crazy at this time. The bears and the bulls are fighting it out. So you get an awful lot of noise. But can you see we've got an A, a B, and a C here? That is wave A of an expanding flat. The signal cleans a little bit. We've got a 1, a 2, and a 3. We still have some weird stuff going on here, but A, B, C, 1, 2, 3. That's where the TSX formed its new high in an expanding flat. Now, we need a fifth wave to complete this pattern. So we've got A, B, C, an expanding triangle, and D. That's D. This is E. That's the end of C of the expanding flat. Now we've got a zigzag that corrects that. This is a motive wave, so it needs to be corrected. Similar to the S&P 500, we have a little bit of a flat or a channel in here. And guess what? There it is, June 8th, the last candle of the life of the petroleum sector, and down we go, this horrendous pattern. Now this pattern in here is called an ending diagonal. It is a 5 set of 3 waves, and these weird things are self-correcting. So once we get out of this pattern, we have this beautiful uptrend forming. We've got wave A, wave 1, wave 2, wave 3, and I don't know what's happening here. Are we moving into a wave 4? Is this just going to be a zigzag and we turn down? It's looking good here. But again, the entry would be when we get to wave 1 being complete. We get a candle breaking through, that would be the trigger. And then as long as we go higher the following day, we could be in. But right now, this is having some trouble. Last week, the OPEC Plus group, led by Russia, decided they're going to put 100,000 barrels per day back into the market. The US also put an awful lot of oil into the market, and that's affecting our TSX composite because our energy sector is so large. So we're just going to have to watch this and see what happens. Now, let me show you maybe something this way. The auto and truck sector, view stocks in this. I'm just going to look at the top stock here. View stock graph. And I'm going to go back a little bit. Wonder if I can go back 1 year. 5 years. Okay. That's where I want it right there. So I'm going to go to weekly, and I'm going to go 3 years. Okay. Now, this is a low before we start this cycle up. Do you see the blast off that occurs in the 5 period or the 5 period moving average of RT? We've got a wave 1, a really elongated weird wave 2. We have a 3, we have a 4, and we have a 5. And this 5 has been corrected by this zigzag. Now, I'm going to go daily, 6 months. Here's the zigzag that corrects it. Now we've got 1, 2, 3, a sideways 4, and a 5. That is a full Elliott wave, motive wave. What I'm expecting to have happen is some kind of correction here. I don't know what it's going to look like. I have to put this on my watch list. But if this does correct, then I'm probably going to be all over it because this is a very, very bullish pattern. Now, one of the things that I'm going to show you is this. Let's see. I go a little bit. Yeah. Here's the correction in wave 4 before we get into 5. So I'm going to take a horizontal line and snap it in here. Just adjust that a little bit. And I'm going to put another one and snap it in here. What I'm doing is marking off the zone of the previous fourth, because usually what happens is when we get a corrective wave like this correction usually ends in the zone of the previous fourth, meaning it usually stops down in here. This one didn't. It bounced off the top of the previous fourth, which is very, very bullish, which leads me to believe that this is going to continue. Can't guarantee it, but that is a good signal. This is a good stock to watch. I'll look at Tesla, and that'll be where I'll stop. Okay, Tesla's had this phenomenal 5 waves down, A, B, and there's a C that really runs all the way here. There's an extension in here that's a problem. So let's see, A, B, C, D, and E, something like that. That can't be a wave C because it's too short. But what I want to show you is this. Oops, I don't want that. I want, yeah, freehand line. That'll probably do it. That's not too bad. This whole cycle is being corrected by a converging triangle. On triangles where these lines meet, not many people draw them out here, but where they cross, something is going to happen in the market. What happened here was that wave 1 formed wave 2 and bottomed out. Then we've got wave 3. Now we have this disaster taking place on Friday. Is this a wave 4? Is this going to be a market collapse? What's this going to be? I don't know. But I'm watching this now to see what's going to develop. I'm anticipating a wave 4 before we get a wave 5, unless all this is a zigzag. Now, something I won't be able to show you because I've run out of time is the fact that I'm seeing a lot of patterns right now that have corrective patterns like this one, the converging triangle, that simply morph into more correcting patterns. A corrective pattern, then another corrective pattern. That happens inside the market. So there's a reason to be concerned here. There's a reason to be concerned because of the reports and events that we have coming up. But I think the whole theory of Elliott waves, when you combine it with the moving average of RT, gives you a fairly strong signal on when to trade the markets and putting probability on your side. I think I better stop there. I've certainly used up as much time as I could possibly have. So I'm going to shut that down. And how do we turn this back over to Stan?
Okay, Phil, I don't know if you can hear me now. I've just changed back to my screen and I'm the presenter now.
Yes, I can.
Oh, great. Well, that's good. I wasn't sure if you could or not.
Okay.
Yeah, some great comments coming in. People are really excited to learn, even if it's just the start of a learning with Elliott waves. And you're getting a lot of great comments, Phil. We're also getting comments from this love chat. I don't know how to get rid of it. Oh, dear. But anyway, lots of nice comments coming in and just a couple of questions.
Uh-oh.
I think people really like the XSP example. Just, it would seem very, very clear to see
Hmm.
the wave three and the wave five. So that was excellent. And I guess what people were wondering, do you usually use the daily? Because the weekly seemed to show up quite well as well. But which is the sort of preferred for the Elliott wave aficionados? Oh, did I lose you again?
I use both,
Okay.
and uh, I'm here. Can you hear me?
Yep, we can hear you now.
Okay. I use both of them because um, the way things work is that the whatever happens on minute charts moves up into the hourly charts. That moves up into the daily charts. What happens on dailies moves up into weeklies. I back off to weeklies so I can take a more global view of what's going on. The patterns are clearer, they're simpler to see. And once I know where I'm at with where I am in the motive wave, which impulse wave I'm in, I move to daily graphs to see more detail. But I can't emphasize enough, you have to be very careful about which pivots are critical and which ones aren't, because there's a lot of noise inside the signals, especially now in the kind of market we're in, where we're in a corrective phase and there's just so much going on. There's so many external reports, there's so many events,
Yeah.
there's
No.
so much war between the bulls and the bears going on.
And
So
that,
it becomes very noisy.
yeah, and Sue just made the comment, and I have to agree. She says, I like the way Phil used the Elliott waves within trend lines. And I think the use of the five moving average of RT kind of helped me identify the waves a little bit more clearly as well. I don't know if you can comment on that, Phil.
Um, the Just a sec here. Okay. Um, so commenting on the use of the RT,
Yeah, the RT
when
and
I
your
first learned Elliott waves,
and your trend lines as
they
well.
tend to teach you to use the and the trend lines. Yes. Well, I like technical analysis, so I started asking myself the question back in the early COVID days: where would the market be if we didn't have all of this um, ex- uh, stimulus going into the market? What would happen if our earnings, which appeared to be strong, continued to be reasonably strong? And that's where that green trend line came from. It was to answer the question where we would be if COVID didn't happen. And I lucked out, really. That's all as I can say. It happened that the market happened to go down to that trend line and bounce. The S&P 500 also had the assistance of that head and shoulders pattern. Nobody knew whether that would play out. So honestly, I lucked out. I got the convergence of two technical signals that told me a bounce was coming. The thing I don't know, Elliott won't tell you. Nobody has a crystal ball. I don't know where it's going to go. I have to watch just like everybody else listening to this presentation.
Yeah. Awesome. Well, you've given us a lot of insights, Phil, and Marguerite, I think, has hit the nail on the head. She found it fascinating and said she probably has to come back and listen to it again. And also, you had mentioned Constance Brown as one of the authors that you like on this, but there was also another one. Maybe you could just remind people
Yes,
what the second author was that you like.
there wasn't a second one.
Oh, okay,
Um, the only one I mentioned was Constance Brown. I
okay,
really I really respect her as a trader. She used to actually advise some of the top traders in the world, um, the big hedge funds, uh, the big investment firms. She used to put out intraday notices of where she thought the S&P 500 was going, where she thought the forex market was going, and she made a good living off using Elliott waves and GAN analysis, actually, to project the directions and targets. So I respect her work a lot. In that textbook, chapter 10 has about, I don't know, 75 to 100 pages. And I know there's a second edition. I have the first edition, but that's the main textbook that I use for it.
Okay. All right. Well, listen, Phil, I want to thank you so much again on behalf of everyone. You've given us some tremendous knowledge to learn more about Elliott Waves, and it looks like there's a lot of desire to learn more. Brent is asking, did you give us the title of Constance Brown's book? I didn't catch that if you did.
Yes, I did. If you want, I'll just type it into the slides before I send it to you.
Okay.
It's
Yeah.
called Technical Analysis for the Trading Professional.
Okay. Technical.
Strategies and Techniques for Today's Turbulent Financial Markets.
Awesome. Okay. And it'll be in the slides then. Phil's going to send me the slides. And again, you'll get the slides on Monday with our thanks again to Phil. So VectorVest will send out the slides on Monday. If you're not a VectorVest subscriber and you would like to get the slides, then you'll need to email me, stan.heller@vectorvest.ca, and I will ask VectorVest to add you to the list. And I want to thank everybody for giving us so many likes, 183 likes. That's awesome. And I hope you enjoy this kind of presentation. And again, watch for more to come. I think we'll have to get Phil back at another time and do a little bit more, especially on the sort of the main patterns that he explained to us. I thought were very visual and interesting and seemed to work so well with the NPI. So really appreciate that. Oh, and Phil, it looks like Michael from Ottawa has chatted in the title. So I think everybody's got it in the chat already, but if you add it to your slides, all the better. Well, listen, everyone, I hope this was a valuable session.
Yes, I can see that.
Yeah, I hope this was a valuable session.
Don Reesma has also typed in the other book.
Yeah, and Dawn's encouraging you to start posting on the VectorVest Facebook page, the user group page. So you might be creating some work for yourself, which is great. And thank you so much for sharing again, Phil. We really appreciate it. And with that, we're going to close.
Well, Stan,
again,
you'll have to teach me how to do that.
Oh, oh boy, you're asking a guy that's not very good on Facebook, but VectorVest support can direct you there. You're on the site, it's pretty easy from there. Listen, we've got over 200 likes now, and I want to thank you again, Phil, and everyone. Thank you so much for. I see all the wonderful chats in the chat box, and the participation is really fantastic with these international online forums. So I agree with Raul, who just chatted in. It was very valuable. So that's great. Really appreciate. All right. Thanks, everyone, and have a great rest of your weekend. And again, the replay will be here on the VectorVest YouTube channel, probably in about 15 minutes. It'll be fully archived and ready to go. So thanks again for your kind comments and really appreciate it. So take care, everyone. Have a great rest of your day.